Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, the market's floating from a gap down this morning back to the positive side, basically flat on the day. You had some M&A activity when Warren Buffett and 3G bought out Heinz, and again, they gave a 20% premium on that stock, which is actually a pretty decent premium paid by the Oracle of Omaha. So we again are looking at a market that is really not seeing significant upside on that news. Usually when an M&A deal from Warren Buffett comes out, it sends the market sharply higher. Definitely not seeing sharply higher today. Spiders SPY are just trading up on this Thursday, February 14th, 2013, about 21 cents on the day. Now the key is to just look at the intraday. You can see clearly you had this little area of resistance right up here. That matches with this area yesterday. You punctured it later on, couldn't get through it. Now you've actually broken through it, which tells me there's a decent chance you head up to the highs from yesterday morning. And again, it's just a float at this point because the volume remains light. And it's so interesting to see this volume trend in the market, folks, because the volume today is on pace for probably about 75 million. It's almost 230, and we just hit 50 million. To see this type of volume that we've seen the last few days we've averaged about 65 million on the SPY. We haven't seen that in years. The last time we saw that was in 2007 when the markets were kind of just gently floating up just like this. The retail investor was getting coaxed in the market, stuff like that. So it does concern me a little bit that it seems like a repeat of history somewhat. Markets again, 52-week highs pretty much almost daily, and you're just having a small float up every single day with no volume. It does concern me a little in that aspect, but again, the key is to just enjoy it and then understand it can turn on a dime. When you have light volume in the markets, it means that the retail investor is the one in the market, since they can't or they don't have enough money to trade a lot of shares. Therefore, that's why the volume is light. And then ultimately to realize that when the institution does come back in, and if the institution is not buying, they're going to be looking to sell. When that volume hits, it could be a very, very quick drop. So I think in general we want to keep that in mind, just in the back of your mind. But aside from that, the float continues today with a small upside move. China's been closed all week for their New Year, so I think that's part of the light volume issue as well. That one area of the globe does add and influence the markets here, and that is not happening since they are closed. A couple other things to look at. We are coming into a holiday week, or I should say weekend. You have President's Day on Monday. President's Day, obviously, people traveling, getting away, especially by tomorrow being Friday. You look for a very quiet market morning tomorrow and afternoon session, even though it's options X should still be very, very quiet. I think once you get into next week, that's where I think at least the cycles are projecting out a little bit more possible weakness with an increase in volume. So it'll be interesting to see if next week we see a little bit of a pullback. I don't think there's much of a pullback out there, but just a little bit out there, maybe back to 150 even number, maybe a little bit lower. There's a chance if it really takes hold, you could actually sell off down to about the 148 level, but the 148 level right now is super firm. But right now, anyways, you can see these little pivots right down here. This area, I mean, this on any sort of pullback, this is just a huge amount of support. 149.60 to about 150 on the SPY. All right. Again, there's your pivot top from yesterday, and then we kind of sold off. Today we opened lower and kind of floated up. Seems like whatever way we open, we go the opposite way the rest of the day. Volume today is not even at 51 million on the SPY. Daily chart continues to be up into the resistance line that I gave out as much as 3 to 4 weeks ago. This line actually tracks all the way back to 2007. It's hard to see when I zoom out on the charts, but if you see this little pivot right here late in 2007, we're basically into that little pivot point. And short term, again, that does tell us that there's some resistance in this area. I think you saw that yesterday if you zoom in on the chart. See how we kind of tagged it early in the morning on that gap up and then pulled back. And then today we opened lower and we're kind of right back into that same area on the SPY. A couple stocks in motion today. Let's take a look here. Apple is just up 74 cents. So Apple, again, is one of these stocks where, it's definitely not the strong leader it was 6 months ago, 8 months ago. It definitely is not that anymore. And you have to wonder if the best it's going to do is be up 50 cents on a $467 stock on a day the markets are slightly positive. What happens when the markets go down? And again, I should let you know that if you're long Apple, I am concerned about that being long Apple right now. I do think that there's a decent chance it will see the 420 area. Now, that's not that far down. In all fairness, that's about 10% lower. But I do think at some point it will drop a little bit on the downside. All right, so just be aware of that if the markets do start to pull back. I do think Apple leads to the downside since it really hasn't been one of the strong stocks. If you look at the chart, the markets have gone like this, right? And then this Apple chart has gone this way. So they've really been going the opposite directions, which tells me if Apple can't get a bid in a good market, what's it going to do in a bad market? A couple other stocks to keep in mind today. Let's take a look at them. Google today is up about $3.60, GOOG. That stock just continues to trade really at 52-week all-time highs. You paused right up in this upper range. I still think it's going $800 though. All right, so I still look for a little bit more upside on Google into the end of the month or so. Also, just one thing to keep in mind: March 1st, the sequester supposedly will take place. That's automatic spending cuts. So far, they've been kicking the can down the road, and by they I mean the government. But again, should those spending cuts actually go into effect, I think it might just shock the markets. I think the markets think that they're always going to kick the can down the road, and they may. But if they don't, I do think that's something that you want to be aware of in terms of possible risk in the future period. Okay? Looking at a couple other stocks, Amazon's flat. BlackBerry opened lower today and then reversed beautifully. An interesting little open today on BlackBerry, actually filling this gap right here. There's a little gap fill right here, and that was actually the low of the day, and then reversing back to the upside. Down the line, a couple months out, I think this is going to be at $10.50. But in the short term, it's a very volatile stock. There's big swings on this stock. I mean, it trades 90 million today so far, so basically it trades over 100 million a day. Huge volume and huge swings. Very rare to see something that trades as much volume as that have these type of swings in it. But again, it's kind of one of those stocks that is a fun day trading stock right now. Goldman continues to inch up. JPM having good days. These stocks kind of paused yesterday a little bit. Last couple of days showed a little weakness. Today they're actually leading the market. So just recognize that, folks. And again, Goldman, I have a great level as a swing short. I'm salivating if it gets there. I don't know if it'll get there, but this is where you have the utmost chance of making money on the short side on Goldman. Gap fill going all the way back to mid-early 2011. And if it fills that gap, that will be a major resistance, major resistance. And even if you get a little bit above that, you have a pivot top right there, pivot top here, and so forth. So again, my guess is based on how extended it is, you should see the pullback if it gets to 160. It's only $4, less than $4 away. So again, that is a major level. All right, let me just see what else we have here. Let me just scan through a couple other charts. Chevron's up a little bit, Exxon's down. We talked about Amazon. Let me just take a look at. Let's see what else we have. There's Heinz. So Heinz getting bought out today. I mentioned that one. You can see the chart here. Huge buyout premium on that stock. So this stock really doesn't move that much. It's just kind of like a long-term grind higher. So again, to get that premium as high as it is it's a good thing for the shareholders. That was a good buyout for shareholders. I'm a little bit more suspicious for Warren Buffett. He'll make money in the long run, but it's not his usual no-brainer deal in terms of making money now. This is more like a long-term hold where he'll make money consistently, and there's not very much risk. I mean, everyone's going to use ketchup and so forth from here on out. But I do think that in this situation, it wasn't like his steal of a deal when he bought Goldman down at $90 and got huge amounts of incentives to get it, and then made 50% on his money in no time at all. All right. I think on that note, I'm going to step aside, guys. Good job in the intraday stock chat as we continue to make money. Swing traders in the research center continue to do well as well. Let's just keep our heads down, continue to understand the type of market we're in, and look for the key cycle day coming up that we have alerted you to. Very minor cycle, but nonetheless, it should give us that little bit of a move that we're looking for. Have a great afternoon. Come here, take the 7-day free trial to the research center. If you're a swing trader, day trader, come to inthemoneystocks.com.